so important to take a look at the technicals. That's another reason perhaps why the market's moved higher. That S&P 500 holding above that 100-day moving average. I think that caused some investors to get back into the market, buying the dip here. Let's get JC Press to join us for some perspective on that. He's the president and founder of All Star Charts. JC, nice to catch up with you. And I know we've got some company-specific stories to talk about, but I first do want to get your take on the S&P 500. What do you see technically?
Yeah, Catherine, I mean, this is an uptrend. I think this is a pullback and a correction that I think needs to be bought. I think particularly the ones that have held up very well. I know you were just talking about the U.S. dollar. I think the U.S. dollar is going to have a big impact, not just on stocks on an absolute basis, but on a relative basis. I think a stronger dollar puts a damper on that reflation trade where commodities and, materials and some of these emerging markets had seen some outperformance since the end of June, really throughout so far the third quarter, most of the third quarter. And I think that if the dollar continues to strengthen, first of all, I think that's just a counter trend move in the dollar. But that's going to give a little bit of a shakeup in that reflation trade. But either way, I think stocks need to be bought. The weight of the evidence is suggesting that we should be spending more time looking for stocks to buy versus looking for stocks to sell. That's how we see it.
All right, let's pick up on that point then. Your year-end target for the S&P 500 is what?
Well, for us, year-end targets, listen, it's great. It's a great story. People love to hear it. But the truth is it's complete nonsense. To be able to put a price and a time on that, I mean, that's just a fool's game. It's a losing game before you even start. 4,000 on the S&P at some point next year, I think it's incredibly feasible. Where we're going to be when we're popping champagne on New Year's Eve, I mean, who knows? Mm-hmm. Probably somewhere between here and 4,000.
Oh, okay, but the point is, you still see upward momentum for the S&P 500 to the point where we could see 4,000 on the S&P.
Yeah, at least. Why not? Listen, this is an uptrend and nothing goes straight up. Stocks tend to consolidate in one of two ways, either through price or through time. We've seen some stocks consolidating through time, really trading sideways for a few months. And we've seen some of the more extreme parabolic moves higher, like technology and communications, pull back more through price, well-deserved mean reversion. But nonetheless, the weight of the evidence continues to suggest that this is a consolidation within an ongoing uptrend. And what do we know historically about consolidations in an ongoing uptrend is that that's historically a good time to be buying stocks. And I think that's now.
Oh, okay, so we've got that on the S&P. What about the NASDAQ? Where do we stand in terms of the correction that we've been seeing?
Yeah, I think they need to be bought. Semiconductors, internet stocks, putting in a heck of a week, nice outside reversal. I mean, can't ask for more than that. Communications, software, got to be buying software, Catherine. These names, you could get some mid-cap software names in uptrends that could be 3, 5, even 10 baggers in the next year.
So let's talk about that then. Which companies? Because, when we think about tech and why we've even seen a correction is because there's been so much concern that the valuations are stretched. So do you have to be still very stock specific in terms of owning software, or Catherine, can you almost buy an ETF?
When are they not concerned about valuation? Come on. Are they ever like, yep, this is the perfect valuation? Come on. So, for me, that's just, it's comical, this valuation game. How are you going to put a valuation on Tesla? There's no fundamentals on a name like that. Right? It's just a figment of your imagination. It's an idea. They don't make money. There's no fundamentals. So to try to put a multiple on Tesla or in some of these SaaS companies, it's hilarious. The fact that they're even trying. And the truth is they're not trying. They're just making numbers up, right? Because they have to, because they get paid good bucks to do that. But if they ever go to the real world, we just laugh at people like that. It's nonsense. So for me, forget the valuation. Most of these companies don't make any money anyway. We want to be looking for trends, and we want to be looking for massive bases and breakouts on both an absolute and relative basis. And there's a ton of them. And for me, it's great. Everyone's always focused about the index. What's the S&P doing? What's the NASDAQ doing? What's Apple doing? And they're so busy worrying about that stuff that they miss the giant elephant walking right past them.
Well, give me the giant elephant then.
Buy the names in uptrends. Great example, Paylocity. It's just under $10 billion. Stock's right around 152, 153. If it's above 150, that puts us above the summer highs. So while everybody's worrying about what stocks are correcting, why don't you focus on the ones that are not correcting, the ones that are breaking out to new highs? And that's really, to me, the giant elephant that's literally walking in front of people that are just closing their eyes because they're worried about what Amazon is doing. Like, come on. That, we want to be buying the stocks that are going to do what Amazon has done for years, right? We want to be buying the next ones, Catherine, right?
I agree. But, back to Tesla, I'm not saying try to figure out just to be very clear, because I actually was a fundamental research analyst at William Blair back a long time ago.
God bless you.
A junior analyst, that is. So covering e-commerce, by the way, in 1998, I'll give you the year.
There you go.
But I'm the fundamental person. You're the technical, and we're talking about technical. So I can appreciate your comment on Tesla.
I won't hold it against you, Catherine. We can still be friends. All good.
Yeah, we can still be friends. Yeah. But on software as a service, we do still want to look at valuations. So let me just bring up one for you right now, although, it's still in the new stage. Snowflake, huge IPO. Yeah. Have you looked at the technicals on that stock? I'm really curious as to whether or not you'd buy it.
It's been trading for a week. There's no data. I need the data. So for me, what am I going to do with 6 days, right? You know what I mean? So for me, give it some time. As a technician, you can think of it think of the private market as the base and the IPO as the breakout, right? So if you think of it using that philosophy, then just use the lows since the new issue as support. So you could say, hey, if we're above the lows that we've seen since the IPO, we can be long. And if it breaks that, it's somebody else's problem. That to me is a solid strategy if you like the name. For me, I think there's just easier trades out there that you don't have to overthink it. Look at nuance, just look at software, look at internet, and to be honest with you, the whole fundamental and valuation thing, I'm all for it. The further away the sell side analysts are from actual price targets, the sexier it is for me. So great, you know what I mean? Have super low targets, when 20% of the sell side has a buy recommendation and the stock's breaking out to all-time highs, man, you're going to get those sell side analysts chasing the heck out of it. So we can use their crowd behavior and the herding and the conflicts of interest on the Wall Street sell side to our advantage. So, I'm all for it. We want them to do that stuff. That's good data.
Yeah, I hear you. When all the analysts have buys on a stock, it's not always the easiest one to obviously buy. So I hear you. You can always use all this information. There's a lot of fundamental analysts that are great at the data, but not great at stock picking, and ones that can pick the stocks but don't have the data to support it. So you got to kind of really pick and choose in terms of which analysts you follow and love and why and how to use them.
It's a great contrarian indicator. When they heard,
can be.
Right, when they heard, right? Not pick on one or the other, but when they herd together, take the other side. Usually you'll be all right.
Yeah, I'm not going to give that fully to you, but there's important points to understand about Wall Street research, which I love. But anyway, but I want to hear a little bit more about another stock pick. You've told us about Paylocity, Nuance Communications. Yeah. That's one that you'd buy today. Why?
Yeah, because it's breaking out of a monster base. The way I learned it, Catherine, the bigger the base, the higher in space. Edwards and McGee called them saucer bottoms. If this Nuance is above $30, that puts us above the 2011 highs. We got to own it. I think this thing can go to 50, and the Paylocity can get above 200. That's another 25, 30%. By the way, that's just in the near term. These are sub $10 billion companies in the software business that can potentially, I'm not saying this is going to be a 10-bagger, but those are the potential implications. So we're trying to take chunks along the way. These things are in uptrends. They're showing relative strength. They're showing positive momentum. If you're worried about the stock market, you're probably looking at stocks that are breaking down to new lows. I would encourage the viewers, right, to focus on the ones that did not correct, the ones that are now breaking out to new highs well before the S&P and the NASDAQ. And Catherine, the fact that these stocks are breaking out to new highs leads me to believe that the NASDAQ and the S&P 500 will soon follow, because it's a market of stocks, not a stock market. These stocks will drive the indexes higher, not the other way around.
Okay, JC, we got to leave it there. Great to see you and catch up with you. And I love your energy on this Friday, September the 25th. Can you believe it's September the 25th, 2020?
Buy stocks, Catherine. We got to be long. Let's go.
I'm buying. I have been. We'll leave it there. Great to see you. That is JC Pretz. He's the president and founder of All Star Charts.